Good morning. Welcome to Stock Market Today. It's Friday, July 10th, 2020. This is your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can find me on Twitter. I'm at Dan_Russo_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where we get a lot of the content for this show, as well as give you daily stock ideas to consider that hit your inbox every trading day before the market opens. So U.S. equities were mostly lower in Thursday's trading, except for the NASDAQ, which continues to power to the upside. Energy, financials, and industrials were the worst performers. Discretionary, tech, and comm services were your leadership. Treasuries were stronger with the curve flattening. The dollar was weaker versus the yen, but stronger versus the euro. Gold was down 90 basis points. WTI crude was down 3% in Thursday trading. So we get to the desk this morning to wrap up the final day of the week. S&P futures are down about 20 basis points after Asian equities were lower overnight, with China down nearly 2%, snapping an 8-day winning streak. European equities are mostly higher. Treasuries are extending their rally with more curve flattening. The dollar is weaker on the major crosses. Gold is up 50 basis points. WTI crude down 1.3% to kick it off on a Friday that has the S&P 500 still churning in the range. It's getting boring. I would love to update this slide in one way or another, but it's just not the case. We take what the market gives us. Churning in the range from that window that opened, that gap lower in early June. 3,000 to 3,100 remains support, 2,850 to 2,950 below that. If February highs remain in play if support holds, right? Nothing's changed here. Resistance 3150 to 3250 in the near term. That would take us that would finally close this window and take us over this June peak. We are closer to overbought than oversold here based on the 13-period CCI and its 3-day moving average, and Chaikin money flow is bearish, though we did see a slight uptick yesterday. So the structure of the S&P 500 remains the same. You can see the 50 and 200-day moving averages converging on each other just above the 3,000 mark, 3,000 being round number support as well. Churning in the range, what do you do in that situation? Well, you focus elsewhere. Focus on the areas of the market that are outperforming, large cap growth. Stay away from the areas that are underperforming, small caps and value. And then drill down on the themes within each of those kind of bigger picture areas of the market. Now, our market in a minute. New high for the NASDAQ while other equity measures fade. We hit on that. The copper to gold ratio is reaching an inflection point, and we talk about what that means for global growth and the growth over value trade. But growth over value remains the trend across market caps. We think, fade the high beta reopening stocks, perhaps. Perhaps that's the best bet. We'll take a look at high beta here a little bit later on in the show. But when I see some of the action taking place in that group, especially high beta relative to low volatility, if you're reading my note, what's interesting is if you drill down on the high beta names or the high beta fund and the names that are in there, you see a lot of the reopening stocks. Futures, as I said, do point to a lower open here today. Let's look at the indices now. Power bar perspective, some weakening here. 3 bulls to 9 bears for the Dow, which lost 1.3% yesterday. S&P down 0.5%, 76 to 126 bulls to bears there. There's your NASDAQ, the only group higher on the day. Up 85 basis points, 31 to 11 bulls to bears. Small caps underperform again, and we're seeing deterioration in their ratio, 434 to 331 bulls to bears. Bonds uptick, sending yields lower. Really solid 30-year Treasury auction yesterday lent a bid across the Treasury landscape, sending yields to the downside. According to the Chaikin Power Bar, small cap stocks more bullish than large cap stocks. Major indexes are mixed. Taking a look now at our stock of the day. Speaking of reopening trades, take a look at Hilton here. I think you have a nice setup if you are bearish. If you own it, it might be an opportunity to take it off the table. It has a HLT, the ticker symbol here. Very bearish Chaikin Power Gauge rating. Weak trend below the declining long-term trend line. Weak industry group. Hotels, restaurants, leisure remain weak. The stock has been an underperformer since the COVID outbreak really gained traction. Call it late February, early March. All the while, Chaikin money flow remaining persistently bearish. HLT is now overbought based on our indicator. Take a look at that overbought, oversold indicator towards the bottom of the screen. So I think you have a nice setup here if you're looking for bearish opportunities. At the same time, if you've owned the stock, right, you've had a nice rally, starting to give some back. You don't want to give it all back. It might make sense to reevaluate why you own this stock. Take a look at Hilton. I think it could be a source of funds. I think it could be an opportunity on the bearish side of the coin. HLT, a very bearish stock here at Chaikin Analytics. Let's dive into the sector tracker. Movement of the major sectors over the last 5 days. Comm services, tech, discretionary at the top of the list. It's the complete opposite of your reopening trade, folks. Those are the areas that were leading heading into the downturn, right? They maintain their relative strength. Discretionary, largely a function of Amazon, but there's other compelling opportunities, if you will, playing out in that space. Staples, the only other group higher over the past 5 days. Middle of the road, healthcare materials, fins and REITs, Utes, industrials, and energy at the bottom of the list. I think that energy is continue to be a fade. I do think that financials continue to be a fade. Real estate, have to be really selective there. Not sure I want to own anything levered to retail. Not sure I want to own anything levered to senior living and assisted living. Utilities, not really holding up, which is kind of surprising here with rates moving lower, but that is the case. So that's the sector breakdown over the last 5 days. Let's hit our industry in focus. Innovative tech services. Call it tech. Call it the stuff that's growing. Call it whatever you like, but it's up 31% relative to the S&P 500 over the past 6 months. Power bar ratio, which looks at future potential, is very strong. 26 bullish stocks for only 2 bearish stocks. It's currently ranked number 2 of 21 subsectors, and it's moved up 1 slot over the past week. Some of the names there that might make sense to do a little work on, see if the setup is there. Wooba, 58.com, very bullish. TrueCar, TRUE, very bullish. And FireEye, a very bullish Chaikin Power Gauge rating here at Chaikin Analytics for an ETF that looks like this. I mean, not a lot to say here, really. Bullish stock, bullish power bar ratio, strong trend. I guess if I wanted to poke holes in it, I'd say we're extended to the upside. This is a volatility band set around our 21-day moving average, and you can see that we are stretched well above it. Overbought, oversold indicator moving towards overbought conditions. Chaikin money flow solidly bullish. Relative strength solidly in favor of outperformance. So it's kind of interesting dynamic here. The trend is up. Do you necessarily want to chase it? I don't think so. And if you read my note today, similar dynamic at play just in general in that growth versus value theme, right? It's a solid trend. We continue to like it. We've liked it for a long time. Don't necessarily think we want to chase it here, though. Just given the extended nature, you can take a look at it if you're reading my note today. Let's look at what's trending now. Yesterday's S&P 500 movers and shakers. Our gainers and losers on the day. F5 caught an upgrade at Morgan Stanley. Sent that stock higher by nearly 8% on the day. Semiconductors were positive yesterday after Microchip made some commentary talking about lead times, talking about some of the strength that they're seeing in select end markets. So that lent a bid to the semis. If you look at semis on a relative basis, they continue to break and work topside. Break out rather and work topside. So semis had a strong day yesterday. Nothing company specific that I saw on AMD up 7%. Same goes for Maxim, MXIM up nearly 4%. Nothing company specific to drive trading there. PNR up 4.5% after catching an upgrade from Bank of America Merrill Lynch. And Cooper, COO, is a very bearish stock here at Chaikin Analytics. But it was up 3.4% yesterday. I did not see any company-specific news to drive the trading there. Mohawk, down 20%. Following a note that's out of Deutsche Bank. Seems like there's a bit of a special situation going on there. I'm not deep in the weeds on it. But down 20% is obviously not a good situation. I'd have to drill down a little bit further to see what's going on there. Hess, down 9.4% as the energy complex was weak. We did get some inventory data previous day, or ahead of the previous day's trading, which showed an inventory build when consensus was for a drawdown. So that could have been weighing on the energy space. yesterday. PSX, same situation, down 7.8%. WBA, that's Walgreens, that was lower by 7.76% on the heels of their earnings announcement. And Apache, APA, down with the rest of the energy complex. So those are your movers and shakers in Thursday's trading. Let's dive into the charts now. Copper versus gold at an inflection point. This is a chart that we've shown you often. It's been rolling over for more than 2 years, right? So the global growth slowdown story is not new, right? You've heard me say this a lot of times. It wasn't COVID, right? Growth was already slowing, and you can see that in this trend with the ratio falling and then remaining below a declining 200-day moving average. Now, in the fourth quarter of last year, we saw a slight uptick. All right, when people got excited about growth prospects on the heels of the U.S.-China signing phase one of the trade deal. Possibly a similar dynamic here at play as people are starting to get a little bit excited about improving economic data. But I think it's an inflection point. We're still below a declining 200-day moving average. And what's interesting to me here is that the bond market, check out TNX at the bottom, bond market not flashing a same kind of regrowth type signal, right? 10-year yield auction earlier this week was really strong. The 30-year auction yesterday was really strong. Yields not moving higher. As a matter of fact, they're beginning to move lower once again. So odds favor this copper versus gold dynamic, reversing back to the downside, signaling the continued trend of slowing global growth, despite a near-term reprieve here since making a low in the March-April timeframe. It's something that we're watching closely, especially when we're seeing signs of inflation picking up, right? Slower growth, rising inflation, not the best setup on earth. There will be opportunities within that framework. If it does play out, we'll try to look for them. I do think that growth stocks will continue to outperform, but if it's a situation that causes the market to get hit and start to break through those key support levels, obviously it's likely to take everything down with it. So the relative trade becomes important as a safe haven, if you will, and then opportunities on the bearish side in the areas of the market that have been underperforming, right, such as small caps. So just something to keep in mind as we think about the playbook and as you kind of run through the if-then scenarios in your head. This is kind of what I'm thinking these days, and I wanted to share that with you here. You can see the RSI of the ratio trying to get overbought here. It's kind of interesting. Like I said, it's an inflection point, right? It is an inflection point that has implications across asset classes. Now, with that being said, do I think you should fade the reopening trade? That's kind of been our view for the past couple of weeks, which has largely played out. Mark Chaikin, for the past couple of weeks in his weekly note, has been talking about wanting to kind of fade the reopened stocks and look bigger picture at the quality growth stocks, and that has been the right play. And what's interesting is you can kind of see it in the high beta ETF, SPHP, the Invesco S&P 500 high beta ETF, pulling back below the 200-day moving average as it tests support. RSI breaking the uptrend line, looks like it's trying to get back into bearish ranges, and the fund is beginning to break the uptrend on a relative basis. Now, if we kind of look at the reopened stocks with bearish ratings that are holdings of this fund, I gave you, not all of them, but what kind of jumped out at me, right? Carnival, Royal, SL Green, Simon Property Group, Tapestry, Wynn, MGM, and Norwegian, right? These are your stocks that were doing better on reopening hopes, and they're beginning to fade. So they're all holdings in SPHB. They all have bearish or very bearish Chaikin power gauge rating. So I just kind of thought that was interesting, especially if we look at SPHB, high beta versus low vol, that's beginning to roll over as well. And likewise, right, the groups that were beaten down the most, that snapped back, beginning to roll over again. Check out small cap value, IWM, Russell 2 value. Right, never made it back above its 200-day moving average, faded, now undercutting the 50-day moving average as the RSI breaks the uptrend line here and moves back towards bearish ranges. And notice on a relative basis how IWN never really got going to the upside against the S&P 500 and is now reasserting back to the downside. So continue to favor growth over value across market caps is kind of my bigger picture view here, while recognizing the fact that growth over value is somewhat extended here in the near term. That's going to wrap us up for a Friday. I hope you all have a great weekend. Take us for a test drive, chaikinanalytics.com/test drive. I'm going to be back with you on Monday.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.